I should have reached out to other people earlier in my career than I did.
And I hear you on that, because if you take on too much, you get overwhelmed.
Here's the problem we're in. How are we going to keep this promise? They're trying to row in an ocean with a spoon.
Thank you for sharing all of that. Hey friends, Trent Christensen here with The Success Factor. In this episode, I had the privilege of interviewing a very long-time friend of mine named Clint Stone, who I used to work with and live near. He has done a phenomenal job in the overall investment industry ever since I worked with him back in the day at Goldman Sachs. This individual is a young Warren Buffett. I am not kidding you. This man is one of the smartest, most risk-averse, detailed, thorough, risk investment investigator that I've ever met. There is not a single word on a prospectus that this man has not read if he's putting his 10, 15, 150 plus $1 million checks into anything. So without further ado, check out Clint Stone. Thank you. All right, so let's jump into it. You ready?
I'm ready.
So where are you at now? Tell me what your title is and who you work for and what you do.
Right on. My title is SVP of Investments, and I joined LHM, Larry H. Miller Company, 2 years ago to help build out this investment function here. And it's been a lot of fun. I cannot believe it's been over 2 years. It has just gone by like a whirlwind. Lots of changes. If you're from Salt Lake City, Utah, which is where I'm from, most people know of Larry H. Miller, of the organization, of the family, of the companies, and huge transformation the past 2-3 years. They sold majority stake in the Utah Jazz. Then little over a year ago, they sold all of the car dealerships. They had almost 70 auto dealerships, which was Larry's first baby. 1979, bought his first dealership off of State Street right here in Murray, Utah, and ended up being a top 10 auto company in the United States 40 years later. And we sold the whole thing to Asbury, a public company out of Georgia, a little over a year ago. So the company's just gone through a massive transformation. We still employ a lot of people. We've got a real estate business. We've got a healthcare business called Advanced Healthcare. We've still got Prestige Financial, which is a finance company. And then we've also still got our toe in sports and entertainment through the Salt Lake Bees, AAA baseball team affiliated with the Anaheim Angels, and Megaplex Theaters.
Okay, so you still have quite a bit of diversified portfolio, but a significant portion of your assets you sold off. What was the point of that? Well, why get rid of all the dealerships? That seems like such a large part of the portfolio.
Yeah, that is a great question. And when I joined, I did not come to LHM with the idea of selling the dealerships. The catalyst for me joining was the majority sale of the Utah Jazz and the liquidity event that took place there, and the money that the cash that created, and the investment opportunity for both the foundation and for the company. It literally was my first week here on the job at LHM that we started talking about selling the dealerships. And I take no credit for it. This was not my idea. Things were well in the works before I got here. Lots of thought process and analysis. And I give all the credit to Gail and the Miller family. I give a lot of credit to Steve Starks, our CEO, Dave Smith, who was chief of strategy, and his team who did all the hard work and heavy lifting to really bring information to the executive management team and the board and the family to say, hey, we can invest, we can divest, or we can rest. We can invest in the dealerships and continue to grow them. And we've got EV coming. How are we going to do that? Here's how much money it's going to take to be prepared to, continue to grow in that market and be competitive. We can divest. Here's what this looks like, and we can rest. We won't invest a ton more into the business. We'll just take the cash flows, have some maintenance CapEx, but not really do a huge growth investment in the dealerships. What does that look like? And they went through the exercise of presenting those three options. It was a really special opportunity. This was before interest rates went from 0 to 5%. Asbury was able to get a lot of debt financing. That was a $3.2 billion cash deal. And it was just an opportunity to de-risk, 40 years of work that had created all this wealth and to diversify and put it into other businesses in just a more diversified manner. And so that was really the thought process. We got what we thought was a very attractive offer from Asbury, really attractive valuation on the business. And the senior team, the family, the board decided this is a good idea. Lots of unknowns, lots of risks with the future of the dealership model. Like, what does that mean? Like when I went and bought I've got an EV, the Ford Mustang Mach-E. And
Mhm.
when I went to the local Ford dealership to buy all they did was put a laptop in front of me and say, all right, go to the Ford website and spec it out. And you still have to choose a dealership to have it delivered to, but like there really wasn't, you can envision this world where you think of the Tesla model
Mhm.
where I'm not sure what economics a dealership really needs to capture there, what value they're bringing. Now we have service centers and there's a lot of things attached to our dealerships. It's not just selling cars, but it's also servicing them and financing them. But even that future was still uncertain. So all of those questions about risk and saying, hey, do we want to be super concentrated in having our future cash flows in this dealership model? Or do we want to take take that valuation, take that money off the table, and preserve wealth and grow wealth in a more diversified manner? And that was the route that they decided to take.
Well, I think the timing was perfect. You couldn't have timed it any better. It was a wise decision. I mean, if anything from timing, but what's the strategy with that cash? Where are they going to deploy it? What's the diversification strategy? Like that's a lot of cash to sit on. So what's their strategy in terms of return on investment or business or foundation strategy utilizing that cash and that capital?
Yeah, great question. The government got their fair share in
Of
taxes.
course.
And honestly, we love America here. We're happy to pay those taxes. This represented 40 plus years of gains. And so that was a big check to the government taxes. That's where some of it went. Gail, I'm sure she does not like to be called the Mother Teresa of the state of Utah, but I think that's a very apt comparison for what she has done and the generosity that she's exemplified here. I mean, she gives an enormous amount away to health, education, economic empowerment, homelessness, women and children, just a lot of different ways there. So her foundation, it's the Larry H. and Gail Miller Family Foundation, it's the family's foundation. Big chunk of the cash went there between those two liquidity events of selling most of the jazz, selling the dealerships. That foundation is now about $700 million. My team, I feel very blessed to be part of that team that oversees it. I built a small team here to oversee that $700 million that's in the family foundation, and we want that to last forever and keep giving and have a piece of that foundation that blesses the community and gives every single year. So that's where a big chunk of the cash went. And then the Larry H. Miller Company also got a big piece of the cash. So what does that mean? What are we doing going forward? So we've still got these operating businesses that I just talked about: real estate, healthcare facilities, finance, sports and entertainment. We are looking for other businesses to add to the platform. They might be a platform business. They might just be kind of a standalone business where we write a check, call it anywhere between 50 to 100 million. Could be a majority ownership of the company, could be a minority stake in that company, but we are basically our own private equity platform of looking to buy pieces or 100%, outright control of other family owned business would be our sweet spot. If we have an edge, if we have a competitive advantage, it's probably here in our backyard, Intermountain West. Think Utah, Idaho, Arizona, Colorado, Nevada. And we don't have to act like a private equity fund, which is really nice. If there's another family owned business where the founder's wanting to think about transition and wants to think about having his employees taken care of, I think we're a very attractive option for a phone call. We don't have to, in 5 to 7 years, create an exit sell the company, to return money to private equity investors in a fund. And I think that gives us, if we have an advantage, that's what our advantage is. This long-term, a really nice reputation of caring for the community, caring for employees, and having that long-term horizon where we don't have to think about, you know, how we can exit this, how we can sell, how we can create a liquidity event for this business.
Gotcha.
And that's really the future of LHM.
Really good summary. I like what you guys are doing. It sounds like a pretty healthy, conservative risk appetite strategy, meaning you guys don't take on a lot of risk. You're probably very conservative from that perspective. I wonder if some of your background, because you worked at Goldman, then after that you worked at Bear Stearns, and then you went to Cornell, and then you worked for the Cornell Endowment, right? And then you went to Ensign, and now you're at Larry H. Miller. Did I miss anything?
You got it all. We're
Every one of those, I would say, is somewhat conservative. Would you disagree?
very conservative. I would absolutely agree. Yeah.
Yeah. We're going to call you Clint Buffett because every time I've ever spoken to you about any kind of analysis, research on stocks or portfolios, you're the one that goes and reads the actual like red herring or disclosure documents word for word. And you go pull out other comparables and you can do a spreadsheet. You're the type of guy that actually really gets into the weeds like you did studying for Cornell. And am I right on that? Is that kind of how you operate? You still do that today or is that how you still operate?
Yeah, man. You got me nailed pretty good. I mean, I can't, it's hard for when I hear something, I'm just naturally like skeptical,
Yeah.
like marketing claims and other things. Like, when I hear something, somebody says, "Oh, here's the data." Like, I just always have to go find like the direct from the source. Like, I got to go verify that. I got to go verify that. Like, I got to go research that myself, understand it, check it, test it, pressure test it. You know what I mean? It's just the natural skeptic in me of being like, is that really the right? You know what I mean? Like yeah.
Yeah.
So
But you've been that way ever since I'd known you back at Goldman days. And that was one of our first jobs, really. Like, did that predate Goldman or is that inherently part of your personality from maybe your childhood or environment? Or is this something that you maybe cultivated, during around that time or shortly thereafter?
I think it's a little bit of both, actually. There's certainly elements of it, traits that I can like look back to my childhood, as a teenager or whatever, and be like, okay, I still, I was inquisitive and I was super interested in how certain parts of the capital markets and the financial market work. And I don't know if I can point to like one experience to say when this flipped, but I was very, very trusting and naive
Mhm.
as a young man. And, not just as a teenager, but even later. And again, I can't think of like one experience of like this had this flip the switch and this massive
Yeah.
change. But early on, I just realized that, man, not everything I hear is like some, honest person on the other side that has the best interests of everybody around them who wants, the good, the greater good to be. I just realized that in fact, most of the time that's not the case. I got to go verify. I got to go get to the truth of it and get like, all right, what part of this is fact and what part of this is fiction? What part of this is spin? What part of this is, a kernel of truth, and kind of develop my own opinion about it. And the more I do that, the more I can't get away from that. Like the more I do that, the more I want to like the next, whatever that next thing is, I've got to go back and like, okay, I'm going to go research that for myself. Like even like you brought up Warren Buffett, and I really appreciate that compliment that I'm zero deserving of any comparison to Warren Buffett. I mean, there's things that he says sometimes that I'm like, is that like I gotta go check on that. Like I want to go verify. I love reading his letters. He just came out with his letter a month ago, a few weeks ago, and as soon as it came out, I spent my Saturday reading through every word. But there's things in there. It's like, whoa, that was it. Like, is that true? Like, I want to go back and like verify that. And I think the more I've done it, the more I've realized how it's just served me well. And it's just really, really helpful to me to understand the world And as I do my analysis, it just helps me get to the bottom of like framing, okay, I got it. I think I've got the information. I think I know why they're saying that. I can see both sides of the argument. It just gives me a better view of the world.
It's a very good trait and a very good skill that you have for sure. And that definitely has contributed to your current success. And it will contribute as you develop that to your future success as well. That's actually something that I admire because I have a hard time. I have ADD. So it's hard for me to sit down and read Warren Buffett's letter because I'll get distracted. But if you give me an audio version, I could go and run or walk or hike and I'll probably bang it out in like an hour and a half or whatever at 1.5 speed. But people like you, I admire because you're doing the work. You're putting forth the effort. You're not just taking face value handshake deals. You're doing the research and you're doing thorough analysis, cross-checking, reference checking. You'll even fly out. I remember when you were at Cornell, you would fly out and look at businesses to buy and interview them and walk and kick the tires type thing. That's exactly what you need to do in a lot of aspects of life. Too many people take face value. Pixels on screen is truth. Even news, right? News hits you, social media hits you, and people believe what they see, believe what they read and hear. Not a lot of people go behind the scenes and do that level of analysis or research or fact checking that you do. Hey, so another question. Let's go to Ensign. So Ensign, it's been in the media a lot recently, right? Good, bad, negative, whatever your opinion is, don't matter. But the fact of the matter is you were head of the fund or part of the fund leadership team there.
I was part of the senior investment team during most of my time there at Ensign Peak. I spent 9 years there. And I can say I really enjoyed my time there. Really enjoyed my time. The people that I worked with there, and I'm still friends with, I'm still close to, I still talk to literally on a weekly basis now. These are some of the most intelligent, skilled, and devoted people that I've worked with. And it's a very mission driven place, Ensign Peak Advisors. And you're not there for the money. You're not there for the publicity or for, to get your name out there. If you want to be a star portfolio manager and have your name in lights and have the recognition and publicity that comes with that, like Ensign Peak Advisors is just the last place you would go just because it's completely quiet. You could do an amazing job and no one will ever know what your track record is. But that's the type of people that go there. And there's incredibly talented and devoted and intelligent people that are managing the money, that are making investment decisions. And they do it because they love it. And they do it because they're mission driven. And they do it because they care about the world and they see all of the good things that portfolio and that pile of assets can do around the world with various humanitarian and education and church mission driven initiatives. And that's why they're there. And it's a very pure place. There's no website. If you are there, you get to practice your craft in a very pure way. Whether you're an analyst, portfolio manager, whatever you're doing there, that's all you have to do. You don't have to market. You don't have to go out and do a roadshow. You don't have to raise money. You just have to do investment research and portfolio management. And it's a very pure place on a number of levels. So I can say that I really enjoyed my time there and to root for their success. They've got a lot of great people managing the money there.
Yeah, that's all really positive. Thanks for sharing that. It's good insight too. They were definitely lucky to have you. That's for sure.
When you're managing any size of institutional portfolio, by far the biggest driver of your returns when you think about these asset classes, public markets, whether they're public markets, private markets, like beta and just market performance is going to drive most of your returns, right? Like whether you're at the Cornell Endowment Fund, whether you're the Larry H. Miller Company or the foundation or at Ensign Peak, when you're dealing with institutional pools of capital and invested in markets, beta and correlated market returns will almost always be the biggest driver. And if you can eke out some alpha on top of that, like you're happy, right? And that's no different than how I feel about my current role here. Like beta is going to drive my returns, and I'm doing everything I can to add some value on top of that, top of those market returns.
Yeah, that's good. One other question for you. Can you comment on how large the Larry H. Miller Foundation and company is today, like in terms of asset size?
Yeah, happy to. So the the foundation, Larry H. and Gail Miller Family Foundation, is about 700 million in AUM. And again, those liquidity events of selling a majority stake in the Jazz and selling the dealerships were the big catalysts for the contributions to that foundation. And hopefully, if I do my job right and my team does our good work and do our job the very best we can, hopefully that number is growing over time. Hopefully, we're overcoming the 5% that it spends every year. Hopefully, we're maintaining purchasing power and keeping up with inflation. And hopefully, we're continuing to grow the corpus and the base of that foundation so that it can continue to give and bless the community. On the Larry H. Miller company side, if we're writing $50 to $100 million check size, that gives you a sense of kind of the balance sheet that we're looking at.
Yeah, that's a healthy size. Clint, so with going back in your career to today, think about the growth that you've had and think about everything that you've gone through. Has your interpretation and view of success in life changed? And what is your view of it today?
Yeah, I love that question. I think this is the favorite. This may be my favorite question so far that you've asked me
Mhm.
because it has changed. As I think about being a young man and thinking about what does success mean, I grew up in Rose Park, Salt Lake City, which I mean, Salt Lake City is not Los Angeles. It's a very safe place, but that was still considered kind of the hood here in Salt Lake. And, when I looked at whether those were friends or other people that had more than I had, like it was easy to equate success with wealth or income or status. Really easy to do that growing up, right? You're just trying to get a feel for the world and looking around and seeing what you have, seeing what other people have. I served a 2-year mission for my faith. I didn't get a pick where I went. I was assigned to go down to South Texas and spent 2 years on the border of Mexico on the Texas side, Brownsville, Laredo, Corpus Christi, McAllen. And that was a very transformative experience for me going through that 2 years of very, very impoverished part of the country. A lot of people coming across the border looking for better economic opportunities. And my job was just to love them, help them, serve them, preach the gospel of Jesus Christ. We did a ton of service. We taught English. I mean, I remember helping some people change their, work on their roof, lay asphalt on their driveways, all kinds of different service projects that my 2 years there in the hot Texas sun.
And
Um,
humidity. Can't
and
forget the humidity.
it was warm, man. It took a while for my face to go from red to normal color when I got back home after those 2 years. But that was a huge transition for me in terms of my mental framing of what does success mean? How do I think about what's important to me? How am I going to build my own life and legacy and family? And to me, it really came down to relationships. And I think that was, if I had to use one word in how I think about success, it all ties back to kind of meaningful relationships. How is somebody going to remember me? Like, how did I treat them? Whether that's somebody I've known in my family for a long time, or that's somebody I happened to cut off while driving my car on the freeway. Like how, you know what I mean? Like how my interactions with others, I'm going to go through life and bump into people, and I'm not always going to be perfect in how I do that, but developing meaningful relationships. And how am I helping somebody else? How am I improving their frame of mind or their situation or their economic opportunity set or their learning? So that's been a big part of it. I love to teach. I've adjunct up at the University of Utah and just my own team. I've always enjoyed learning and teaching. And I think that's all comes back to those definitions around relationships for me. Those are key in terms of how I frame success.
So If I'm understanding you correctly, I think you're interpreting success, or your view of success is a better way to articulate it, is having healthy relationships, something like that. Would you agree with
Absolutely.
that? Okay.
Absolutely.
That's awesome. I'm so glad you went down that path to answer the question, because you made me think of a lot of things in my own life that have helped shape my perspective of those relationships and reevaluate the priority and the importance. And those are way more important to me today than they haven't been in the past. And I think that comes with the growth, and that comes with experiences like you serving a mission, preaching the gospel and serving all these people in Texas, age, many experiences, kids. And that's such a good answer to what success means to you, because I think almost everyone has another relationship in their life, or a relationship they can think about. Some have many, but that is what you really remember when you die. When you move on and we leave this earth, you have memories with those relationships. You have those experiences. And that, I think, is something we never lose. And that's ultimately most important than anything else. Your social media likes, subscribers, downloads, like nothing matters except the relationships in your life.
Yeah. Completely
Yeah,
agree.
spot on.
I remember a time a few years ago. I mean, this wasn't all that long ago, when I was up late at night, sitting in my living room with my wife, and just kind of lamenting about my career post Cornell, and had all these friends. Kind of, some of them were CEOs, some of them were doing amazing things in innovation, or at various companies on the cutting edge of just really cool businesses in various industries, literally around the world. And I was just thinking about my current role and my current job at the time, and it was like, man, this isn't quite what I had in mind for like my own vision of where I wanted to be, and my own, just really kind of like getting down on myself, and vocalizing all this to my wife, who's sitting there just, listening to me. And then she looks at me, and when I was done with my big rant, and just says, "Hey, you are the CEO of the Stone family, and your company is doing really well." And that was it. It was just like, all right, snap back to reality. What matters to me? Of course, I love traveling with my kids. I love seeing them reach their goals. I love seeing them develop. I love, same with my wife. She's got initiatives and loves and things in her life that she loves doing. I love being part of that and seeing her achieve what she wants to achieve. It just reminded me that, like, okay, this, like, the true core of what matters to me is doing just fine. It's doing just fine. And I'm always going to remember that moment of being kind of like slapped back into my own reality of like, hey, what really matters here? And it helped just come back to my roots of reframing success to me and what that looks like.
Yeah, that's so cool. It's amazing how no matter who you are, no matter how much money you have in the bank, and no matter what title you have, you're going to have those feelings. Those feelings of, is this enough? What else can I do? Is this all I want in life? I'm not good enough. Or even depression. Those feelings come and go. I mean, that's part of our human experience. And the fact that you have other people in your life to be able to go and verbalize it, it's very therapeutic. You just getting it out there and saying it is therapeutic. And when you have a spouse that supports and loves you and comes back with something like that to help you quickly get back on point, or snap out of those emotions, or rebalance your brain and cognitive, interpretation of those feelings. Holy crap, dude, that's what all of us need. A friend, a partner, whoever, a spouse that can do that for us, and we can do it for them. And that really is powerful, dude. You guys are dialed in. She's got high level emotional intelligence there. I'll tell you that.
Amen, brother. Amen.
Yeah. She's a great woman. Okay. Another question for you, Clint. So what is your advice to those who are looking to get into the investment space? People are wanting to go and do the level of research and, you know, prospectus reading that you've done in your life. What would you tell them today, in today's market, today's environment and economy? What are some of the tricks that you can teach them today that can help them succeed and put their best foot forward?
Do as much as you can to make investing part of your life and who you are, and just show that you're genuinely, intrinsically passionate about all things investing. Now, how do you do that? I don't think there's one right answer. I think there are many, many paths and many, many ways to do that. I started as a kid with a little bit of money in a mutual fund. And the only way I would get the returns, find out how well that mutual fund did, is wait for the Saturday morning paper, because that was the paper that had the mutual fund quotes. And I could see how it did that week and how it was doing on like a month to date, year to date. And I did that for a long, long time. It just helped me get into like, oh, this is super interesting. I could see these funds in Latin America who were like doing incredibly well. Like they're way, like I'm getting a way better. I would have got a way better return on these funds than my own. I was in the Putnam New Opportunities Fund. I still remember the name of the mutual fund.
Of course you would. You're Clint Stone.
And so it was just having that experience of like, oh, this is super interesting. I knew nothing about really investing. Like I didn't even know like the biggest companies or positions in the Putnam New Opportunities Fund. Like I was just comparing it what was on this page in the newspaper. But if I could go back and like give my own self some advice, it would be to, hey, dig a little deeper. What else is like, what's in there? How is it performing? Like what's driving the performance? Just really, really simply, what companies? And just start following certain companies and learning, like, how do I think about investing in a bank or a financial company versus a tech company or a consumer company? Like there's different ways of thinking about that and different valuation metrics and all of those things I had to learn over time. I mean, I'm on your podcast. I'm here at the Larry H. Miller Company. I'm truly living my dream of like what I love doing, coming into work every day and thinking about the world and trying to find the very best way to manage capital in this whole world of public equities, real estate, private equity, venture capital, hedge fund strategies. You got private operating businesses. You got the whole world is potential investment. But like I didn't, it was a lot of work to get here. Like you knew what I was doing
Oh,
at Goldman Sachs.
Clint,
You knew
hold on.
exactly the type of
Oh
work
my
that
gosh.
at Goldman Sachs. I mean, it was not glamorous investment research by any stretch. I mean, it took a lot of like, I got to figure this out. And so it was a learning process for me.
When you say it takes a lot of work and knowing how humble you are, I just want to reemphasize here that it's not just a lot of work. We're talking a lot of work times like 50x. Like that's the amount of work you put into this because you are the one who goes and picks up the prospectuses and reads every page. Like you're hyper focused on achieving, learning, developing that knowledge and insight into whatever you're looking into. And that is something that has helped you get to where you're at. Without question, it's a tremendous amount of work, more so than anyone I know.
I'm just a nerd, man. That's what my wife calls me. I'm just a big nerd. I'm trying to become a normal person, but I'm just still a nerd.
Well, I love your nerdness and everyone else around you that you work with loves your nerdness. And that's why you're at where you're at. And your wife loves your nerdiness too.
One more thought came to my mind as
go ahead.
You were talking on that point of like, how do what advice would I have to myself, to other people in terms of cracking into the investment industry? Because like, it's hard. Like it really is. Like, it's not, there's a lot of really, really opinionated, intelligent people here. And they love to think that they know who the next generation is, who's either good or who's not good. And they love to be able to play that role of, nah, I'm going to let them in. I'm going to keep them out. Like they're good. They're not good. There's also a lot of people that are really willing to share their experience and help others. I should have reached out to other people earlier in my career than I did. I realized too late that if I reached out to somebody and was genuinely interested in what they did, because I was like, man, this may be something interesting for me. I'm interested in this possibly as a career for me. And I'm young and I'm early and I don't know the trade-offs and the pros and cons, but I'd love to meet with you and hear about your story. Most of the time, there's people are going to respond in a positive way to that. And
Totally.
I should have reached out and made more connections a lot earlier than I did in my career. People that were in the industry and just say, "Hey, how did you get from point A to point B? Like, how did you get into this company? How did you like? What did you do?" And again, I don't think there's one right path, one right answer, one way to get into the investment industry, but you learn a lot and you get some great advice and you just build connections. Like I got internship interviews and I got, opportunities to go interview at some of these places once I did start reaching out to people because they knew that I was like genuinely interested in that area of investment research. That just opened a lot of doors. When you're a student, you have special powers. Like I'm just convinced you have special powers. And the day you graduate, those special powers go away. Like when you can use your .edu email to reach out to somebody in the industry and just say, "Hey, I'm just a dumb student. I'm just trying to figure life out." They're kind of like, "Whoa, this person reached out to me." And not everybody's going to respond in a super positive way, but you definitely have got some special powers as a student that kind of disappear when you're out in the job market competing with other people.
Oh, totally. And I think you get that advantage because they're curious about who you are when they see the EDU too. You could be some kind of big shot or professor or who knows. But now you commented on something that I think is interesting. That is interviewing people or profiling people and having the conversation about their job, their career, their business, whatever. I agree with you on that. I wish I started this podcast 19 years ago at the start of kind of my financial services career because honestly, reaching out to people and having those conversations and like these kind of conversations and especially people that are in the field you're looking to get into, dude, it's amazing what you can learn. And it fast tracks your lessons that you need to learn. And it also helps you avoid pitfalls and failures through that wisdom and insight by interviewing or talking to people.
Awesome. Well, I love that you finally figured it out. And if I could go back and push you in the podcast direction 19 years ago, I would have done it because you are really, really good at this.
Thanks, man. I appreciate it. Another question for you. What's your view on the economic state today? I mean, SVP just almost failed. We got Credit Suisse. We got a lot of other banks. What's your view of everything that's going on? Is the sky going to fall? Is this pre 2008 again 2.0, but maximized? Or what's your view?
Man, you hit a hot button for me on the macro front. We spend a lot of time reading, researching, talking about macro in all of our investment decisions that we're making. And going back to Warren Buffett in his latest annual letter, he said he and Charlie plead ignorance when it comes to near term macroeconomic and market forecasts. And he used the words worse than useless in terms of making those projections, which I thought was fabulous in terms of focus on risk management, focus on running your business, focus on your strategy. I'm always understanding the world, wanting to soak it in and understand what's happening around the world. But man, I've spent way too many hours in my life discussing what I think is going to happen in the macro economy or the markets. And I can't tell the future. And I just have no idea. All of that said, that's my disclaimer. I have no idea. It's a waste of time. It's the economy and the markets are so complex and interconnected, and there's so many different players and behaviors involved that it's just not knowable. But if I had a hunch on what my personal view is in terms of things that will come out of this, I'll make a few points. I'll make a few observations. If you look at what happened with Silicon Valley Bank, if you look at the lack of liquidity in the banking system generally today, where did it start? I can trace the roots all the way back to COVID. Like, I don't want to say COVID killed SVB, but maybe it did. Maybe that was the biggest casualty of COVID was SVB. How did that happen? So COVID just immediately closes the economy because of health reasons. And the Fed and the government in the United States respond immediately and with an enormous response, with an enormous impulse. About 5 trillion was put into households and businesses' bank accounts to make them whole from COVID, the COVID situation. Well, where did that 5 trillion go? Some people spent it, but a lot of that cash ended up in bank accounts, ended up in deposit accounts, and ended up on the balance sheets of banks. And so when interest rates are zero and you're a bank and you've got all this cash and deposits and you're trying to earn a net interest margin and a return on your capital, you've got to find some productive way to earn a spread. And lending has been very low. There wasn't huge demand for loans. And so they bought treasuries and mortgage-backed securities and things that actually had a spread. Now, if you bought those when those were 2%, and you've got whatever, call it a 6 or 7 year duration on your portfolio, and interest rates go from 0 to almost 5% in 12 months' time, that's an enormous mark-to-market loss on your securities. And you don't want to sell, if you're a bank, you don't want to liquidate those because you'd have to realize that loss. And so it just immediately makes you illiquid. And for Silicon Valley Bank, it made them insolvent, not just illiquid, but their mark-to-market losses were larger than their equity in the bank.
Was it because they're over leverage your investment into the tech sector, and now we've had a lot of tech stock like decreases and tanks? I mean, your mark to market will be impacted there too, and that impacts your liquidity as well, right?
You know,
Revaluation.
it's a good question. I think it's too early to tell how well SVB's loan book is going to perform. I actually don't think the core of their problems were from bad loans to venture firms. If they could have had more of those, more good loans to venture firms, maybe they wouldn't have been forced to go buy treasuries and mortgage-backed securities at 2%. And maybe be in a better position. Clearly, you know, when you have a bank run and people get spooked and pull their deposits out of a bank, it just creates this cascading problem where the bank can go upside down really, really quickly, which is unfortunately what happened with SVB. Interesting to note that General Catalyst is leading the charge with venture firms and saying, hey, Silicon Valley Bank has been very, very good to us for many decades. Let's try to be good to them. And they've got like 650 signatories trying to continue to bank and keep their capital call lines with Silicon Valley Bank. So interesting. Well, I don't know if it'll be enough to save that brand, but kind of interesting to see where that plays out. So what happens from here? The Fed is either going to hike 25 bips in 2 days when they meet on the 22nd, possibly no hike. I think those are the only two outcomes on the table. I don't think a 50 bip hike is in play. I think the market's pricing in close to a 50-50 coin flip is of either 25 bip hike or no hike.
Is that the right move in your mind, or would you make a different move?
To me, the right move, I think the Fed probably does hike to just save credibility because they've been on this path of like combating inflation and the CPI numbers, the latest CPI numbers were still, a little bit hot, especially the core month-over-month number. But honestly, if they're really just trying to forget the credibility, just like what is the right thing to do? They've raised rates so dramatically in such a short period of time. That takes 1 to 2 years to really flow through the banking system and the economy. And so I would pause. I would absolutely pause if I was the Fed, and just, especially given what's happened with the stress. What's funny is they have two mandates, right? They've got inflation mandate and they've got an employment mandate. And on employment, they're getting an A+ right now, an absolute A+. I mean, we have got an incredible labor market. Now, Amazon is announcing some job cuts, and there's job cuts here and there. But in terms of, at least right now, where we are looking backward, the labor market is in incredible shape, A+. Inflation is where they were slow. They thought things were going to be transitory. They weren't, at least not as transitory as they thought. And they've had to play catch up there. But I see inflation gradually coming down. I think the level of the lake is higher. I don't think we go back to 1.5%, kind of inflation anytime soon. I think it kind of levels out a little bit higher level, but I do see it coming down, whether the Fed hikes next week or not. Like inflation is much bigger than what the Fed, like the Fed's tools are actually pretty blunt
Yeah.
tools. When you think about what they're trying to do, right? They're trying to row in an ocean with a spoon sometimes. How are they going to control the behavior of banks, businesses, households? Just the economy is way bigger than they can fully control. They've got very, very blunt tools, powerful at times, like, interest rates in their balance sheet. The Fed balance sheet is very, very powerful tools, but they still only do so much. And sometimes I think we expect way too much of the Fed, to think that then they're the only thing that controls the economy, which is just completely silly to think about. So I don't know what's going to happen. I do think corporate earnings are, S&P 500 earnings growth, probably not going to be great. In fact, very likely to be a little negative. We've had some negative quarters. Wouldn't be surprised if we get another, negative EPS growth quarter or two in 2023. Banks are not in a position, lending growth in banks. First of all, there's not huge demand for business or credit or personal credit. You look at mortgages, you look at, there's just not a ton of demand for loans from banks. But even if there were, I don't think banks aren't in a great position to be.
Well, yeah, and optionality saturation too. Everyone, the credit's available at, you can go to Circle K and get a credit card. I mean, they have credit cards everywhere. The credit available saturation in the market is overboard.
Yeah. Yeah.
Okay. I have another question that you made me think of. This is a curveball, Clint. I don't know if you can handle this, but do your best. Use all your knowledge and experience and all those prospectus readings that you've done to date to answer this question. If you were in charge and the sole decision maker on how to resolve our country's Social Security deficit and fund for generations to come, what would you do?
Oh, man. You're asking me some tough questions, man. Should have gave me a heads up on this one.
I know you can handle it, Clint. This is impromptu hyper analysis, cumulative knowledge, regurgitation that I'm asking of you. Your gut, just what your gut instinct is.
I would think long term about it and do my best. This is always a problem politically, right? Because a president is only in for 4 years. Maybe they get reelected for an additional 4, but Congress and the president can't make 40-year decisions. They just can't. Honestly, this is a very interesting aspect of how the Chinese govern and how it's different than the United States. Their leadership can take a decades plus long view and take a much more gradual long-term approach and create change at the government level. And that's very, very tough for us to do in the United States, given our political underpinnings and Congress and how everything's set up. But that's what I think we've got to try to do, is take a 40-year view and say we've made these promises to the American people, either through Social Security or through Medicare. How are we going to keep these promises? Or do we want to adjust? Do we want to try to adjust that contract? How you keep those promises? The only way is inflation. That's simply the only. I don't see how they're going to get there through increased tax revenue or through deficits. Government budget deficits, I think, are here to stay. It's just really almost like a matter of how much is the deficit going to be? And so you've got to take a very long-term view to say, how do we want to adjust that contract and say, we're still going to have some benefits, Social Security, Medicare, but we need to make some adjustments to make it work and to make our promise, to be able to keep our promise in the future. Now, if you're trying to get elected, how you get elected on that type of,
Yeah.
Here we go. I'm here to cut Social Security. Everybody elect me. It's super difficult, but I think you've got to start to bring the data to the fore and say, here's the here's the problem we're in. How are we going to keep this promise? Because just saying, hey, it's not an issue and just keep kicking the can down the road, it's to me is not the right solution. I think you have to confront it. I think you need the data on the table. That will help everybody. Everybody may not view the data the same way, which is perfectly okay, but get it out there, get the debate out there. But at least everybody will start to see like, oh, we've got a gap to fill. Like, how are we going to do that? How are we going to fund these future promises? And at least you can start to think about ways around that. Well, let's think a little bit more carefully about Social Security, Medicare, or the U.S. healthcare system. How can we get private markets and private businesses involved in competition, and the invisible hand involved in certain areas to create innovative solutions? How can we be more efficient, cut costs out of the system? All those things have got to be on the table. Otherwise, the only solution is just continue to print money and inflate the problem away. The problem is growing bigger, even if you're inflating. And so it's just this never ending problem of fully getting to the end and saying, hey, we've caught up. The present value of our funding sources are equal to the present value of our liabilities. And we can look the American people in the eye and say, hey, we're good. We've got a plan to keep our promises. And right now you can't do that. It's just the math doesn't work. So I said a
Yeah.
lot there.
It's a complex problem. That was definitely an unfair question of me to ask you on, in a curveball, but I knew you could handle it. You're good at getting curveballs hit back. And you hit that right back. That was pretty smooth. And there is no easy answer for some things like that. It just takes a lot of trial, error, research, analysis, exploring options, getting creative, just like a lot of things in life. There's no magic pill. There's not a one drop on your tongue solves all your health problem solution. There is a lot of effort with to put into a lot of things to really do it right and do it the best way we can. And I like that about you because you appreciate that too. And it comes across in how you articulate challenges or navigate through your career or even just these questions, right? Especially about the Social Security. You understand and appreciate it's much more complex and you have to go through the details.
I
Yeah.
think I think you and I, some people have said, hey, don't plan on any Social Security for retirement. And that's probably the best way to approach retirement is just to like, okay, in 30 years, like I'm gonna have my own solution and way of retiring and my own assets. And whatever I get from Social Security is just gravy on top of that. That's probably the best way to think about it. But I think we'll get something. I think you and I are going to get some from Social Security in 25, 35, 40 years. It may not be, maybe inflated away, it may not be worth as much in purchasing power. There may actually be an adjustment to that contract and it may be a little bit less than what the current amount is in place today. But I don't know. I actually think there'll still be something there in terms
Yeah.
of this is such a long-term problem. You can keep kicking that can down the road for another decade, unfortunately. And we'll see. We'll see. There does seem to be a limit to everything when it comes to money printing and deficits and debt. And we'll see when that all comes to a head.
Yeah, I agree with you on that. It's going to be something that it's going to take a long time to fix. I mean, heck, if they just printed 5 trillion as a result of COVID, I mean, you put 5 trillion in the Social Security right now, that will solve that problem. I think. I mean, that's a lot of money. And they did that as a result of COVID. So there'll be a day in the future where it's enough of a problem. They're going to have to just write some checks. It's going to happen. How do you balance your work and life and family, your 5 kids and, your personal interest, investing in you, doing mental breaks and, staying fit? How do you balance it all? What's your secret?
Yeah, I'm a minimalist, honestly. Like I'm involved with a couple boards and investment committees outside of the Larry H. Miller Company, involved with some local community and church stuff. But I'm kind of a minimalist. Like when I get in, if I get invited to go do different things or be involved with different things, I'm okay to say no sometimes. I'm okay to say that's not for me. And that has helped a lot. Just kind of keep my focus, keep my true north. I want to be there for my family. I just I just made this comment yesterday, hanging out with my family on Sunday afternoon. I was like, we're like spending the whole day in the same room with each other. Like, this is pretty cool. Like, I don't know. Like, it's you're my only family, so I don't know what like would be different. But like, maybe there's some families who don't do that. I kind of like having that downtime and hanging out with them, whether it's at home, whether it's going to their sports games or their piano recitals or traveling. We love to travel together locally, do road trips or bigger travel around the United States or even outside the country. And those are just all things that we look forward to doing. So I'm a minimalist. I just try to stay focused on my job, my family, and then around the edges, I love to cycle, road bike, mountain bike, and I still play some pickleball, still play some table tennis, and that keeps me in shape and keeps me social with some friends, gets me outside to do different things, and that's it. But I'm just kind of a minimalist when it comes to getting involved in other things that can really take up my time. I want to make sure that it's something that I'm really passionate about, that I care about, that I know I'm gonna if it's something that's like, oh, I know they want me, I know why they want me on this board, or I know why they, but if I'm not going to be available to do it, then why even say yes to it? I'm okay to, I'm an adjunct professor up at the University of Utah, but didn't teach this last semester. And it was just too big. It was just too big for me to put on my plate. I love teaching. I love showing up in class. And honestly, if I could just show up once a week and just do the night class for 3 hours, like I was doing as an adjunct, and not have to think about it the rest of the week, I continue to do it. But all of that other stuff of preparing the curriculum, interacting with students, responding to students, grading, like I just realized that I just built a little team here at LHM, and that's going to be my attention. And I just didn't want to kind of have overwhelmed calendar and trying to do both. So yeah, I guess you could just say I'm lazy. I'm a minimalist.
You,
I
you
just
are
can't.
not lazy. That's for sure. You are the least laziest person I've ever met. That's for sure. But I hear you on that because if you take on too much, you get overwhelmed. And for me, I can relate because any project or pile or mess let's say I walk into a disaster at home, it's easy to get overwhelmed and it's easy to look at the full thing, the full picture and get overwhelmed. And so same with our schedule, our life, our extracurricular social obligations or commitments. It can overwhelm you if you sign up for too much.
I try
Yeah.
to I try to be careful about how much time I spend on social media. I Again, coming back to being a minimalist, I'll use LinkedIn, but I like to use LinkedIn as like a resource for me and my goals, and not as like being pulled into things by other people. And you know what I mean? Like I'm kind of a minimalist when it comes to social media. I realize its power, and I try to use it when I need to, but try not to just dump a lot of time. And I mean, social media is a powerful thing, and there's so many platforms and so many ways to get connected and spend time. And I just noticed for me that I've got to be careful about that. So I'm not on Twitter. I'm not on Instagram. I'm not like I get most of my social media news from my wife, who's like, "Hey, oh, I didn't know about that." Like, I'm just not. Otherwise, I could easily get sucked into it and just super infotainment. But that's yeah, it just comes back to my own kind of personal creed of how do I want to spend my time. I'd much rather if I've got some extra time outside my work and my family, man, I let me jump on a bike. Let me go hang out, do something physical with friends. Go
Yeah.
play pickleball. Like that sounds way more fun to me than sitting at home scrolling through screen after screen and story after story of what somebody else is doing in their lives.
Yeah.
Yeah.
I love that, man. It's so true though. And you can let it get out of control if you let it. And it sounds like you got some good, healthy balances and rules that you're following that are working for you, and everyone's different. And I think balance is the hardest thing for a lot of people, just balancing your time, commitments, obligations, growth, investment in yourself, everything. But life is a balance. You have to balance. And sometimes you just got to kick things out of the way because it's lopsided and you're balancing.
Yeah.
Speaking of balance, I have been speaking to you for way more than you probably had time allotted for this interview. So I just first want to say thank you so much for coming on the Success Factor and doing this podcast episode with me, and super glad that you did this and I was able to have the time and you had the time, because it's great to see you and connect. And it's amazing how you've grown. It's amazing how even your articulation and communication skills, you've definitely have a commercial professional background behind you. And it shows in your voice and your articulation, all of this cumulative experience knowledge that you've soaked up. So thank you for sharing all of that.
You're way too generous. I'm happy to be here. Happy to share my thoughts, and super excited about your podcast and being part of it. Really an honor. Thanks for thinking of me, and really enjoyed the discussion and catching up with you. Like, I just cannot believe how long it's been.
All right, man. Thanks, brother.
All right, bro.
We'll see you, Clint Stone.
So good to see you. Talk to you soon.
Take care.